and welcome to Big Deal. In the last 2 months, at the peak of the pandemic, there is one bright spot on the deal street which is attracting substantial foreign investments. While the rest of the real estate sector may be a dampener, commercial realty has seen a growing interest coming in from the global deep-pocketed investors, and deals worth close to almost $4 billion are in the making as we speak. REITs are seen as the ones which are really creating this traction, and that could be one of the biggest reasons why the investors are lining up. Let's understand the space from the sector experts. Let me welcome on the show Ramesh Nair of JLL India, Jaggi Marwaha of Prestige Office Ventures, and from the investors side, we have with us Avinash Sule of Jaguar Growth Partners. Gentlemen, so good to have you on Big Deal. Now, starting with you, Jaggi, you are now on the developer side, and you have been with JLL as well as WeWork. How do you see this particular situation, and what is it that's attracting the investors?
Thank you. I think, the entire office markets have been on an upswing since the last 5-7 years. In fact, post GFC since 2012, we have been having quite a bull run in the office market. In fact, last year we broke all records in India by leasing about almost 49 million square feet of space. Never seen before that kind of traction, and that actually brought down a lot of vacancy in the market, brought it down to very low levels, single-digit levels, and that actually shows, because Indian office commercial real estate market is governed by the biggest attractors are the IT technology companies or the global investment corporations, who still see India as one of the biggest attraction in terms of great talent, lowest cost from the talent perspective. So the IT story is actually pushing this entire growth. And this is perhaps the right time where people see a huge opportunity to further consolidate their positions in a market which is, I would say, much maturing quarter by quarter. Great quality of assets being, developed by the leading developers, and with the governance, with the compliance, and more importantly, the partnerships that they're getting with the best global investors who are attracted to such assets, it's a win-win for all of them, including us and the investors. So I think that's the bright shining star in the otherwise gloomy overall environment that we are all in right now.
That's right, but some of the pockets have still seen investments like this particular pocket. A lot of equity market action has also taken place. So there have been bright spots, and this is one of them. Ramesh, let me come to you. Of course, Jaggi enumerated the reasons why the investors are getting gung-ho on this particular space. But the two important deals that have really come to the surface are underway, close to $4 billion coming in from Brookfield and Blackstone. First, it's concentrated in terms of investors, and it's concentrated in terms of what they like also. Like they are looking at high-end luxury, good office spaces. So how do you see the overall investor interest? And also, I would like to ask that REITs have really matured very recently. The monetization through REITs, is that the biggest driver that investors are lining up for?
See, Nisha, REIT globally is a $2 trillion asset class. In India, it's only a 1.5-year-old story when last April, when the embassy offices REIT came into play. And we have already seen close to a market cap of $6 billion between the two REITs, which itself is not bad, given that it's already 1/3 of the total market cap of real estate listed players. We saw how the Mindspace REIT was oversubscribed 13 times. And here, Brookfield also now planning a REIT of another 600 million. We did this analysis in terms of how much out of the 600 million square feet of office space is REIT worthy in the country. And that number is close to a 300 million square feet number. So nearly half the office space in the country can be REITed, and the opportunity is around a $35 billion possible. Now, why are these REITs succeeding? One, both these REITs had very good management teams, great managers, great CEOs, very good sponsors. Blackstone was there in both these REITs. 90% of the portfolio was leased. We shouldn't forget that. There was a huge number of multinationals, Fortune 500 companies who are the occupiers in these portfolios.
Yes.
The CAGR rental growth story also kind of made sense. So there's one thing we need to be also careful about when it comes to REITs. The first is the REIT story has today become so popular because one, we are selling the rental annual rental growth story.
Yes.
Second, the mark-to-market pricing, which is, okay, today you're at 50 rupees rental. When it comes for renewal, I'll give it at 70 rupees, not at 55 rupees. And third is the existing potential for development.
Yes.
So the first two aspects, which is annual rental growth story, is obviously going to slow down a little bit over the next 1 to 2 years. So one needs to be careful about that. And the mark-to-market opportunity, which was also there till pre-COVID levels, that opportunity may not exist as much as it was there pre-COVID. So these are two things one needs to keep in mind. But the biggest thing for the investor, a retail investor like us who put in that 1 lakh rupee units, is you get both a quarterly dividend and growth in capital value. So you have the benefits of both fixed income as well as equity coming out of the
That's the main point, actually, Ramesh. Fixed income, the equity upside, and also an indirect way of investing in property at a smaller ticket size. All these are really coming to the benefit, and also an alternative mode of investment. What if equity markets do not have that kind of a convection from the retail players, smaller retail players? All right, let me take it to the investor side also. Now, Avinash, Sule, you've been in this sector for a very long time. You were part of a sovereign wealth fund, and you've had a good exit also as part of that. And now Jaguar Growth Partners is raising funds to invest in India. How do you see this? And especially, I want to ask you your interest on commercial real estate, because as of today, it's concentrated in a few hands like Blackstone, Brookfield, and GIC.
Thanks, Nisha. I think, let me put it this way, we are talking to a lot of international investors, and all the global pools of capital are coming to us saying we need to diversify our pools from the US, Europe, and rest of Asia. We want an allocation into the growth markets of Asia. So they come to us saying, given our experience, how do we participate? Our experience across the emerging markets tells us there are 3 key tenets that investors look for, and that's what our filters are when we're looking for partners in India. Right? Are they scalable? Is there growth in the asset class? Is there growth in the strategy? Do they have good governance standards? And is there alignment? Now, this time around, what is different is there's a big next point called scale. All these global players earlier looked at India, said it's too small, didn't want to come in. However, now the opportunity size has expanded, as Ramesh alluded to, and Jaggi did. The market size has expanded. And suddenly, other pools of capital that were not looking at India, it checks the boxes and they want to enter. What are they seeking, and why do they want to come into India now, and what are we looking at in India? As you rightly said, the top 5 players already have big pools of capital chasing them, if at all. Jaggi would mention how many pools of capital chase him for his asset class. For us, it's below that. India has enough number of entrepreneurs below the top 5 who still have good assets. Ramesh mentioned the 300 million square feet of assets that can come out as REITs. They don't have an institutional partner. We are looking at many of those guys saying, okay, we can help them get to the next level. That's the interest.
All right, so help them get to the next level. But Ramesh, an interesting point that has been made by Avinash is that new pool of capital. So I have been harping on concentration. What is the traction there that you're seeing? Will this sector manage to attract new pools of capital towards India as FDI?
Nisha, if I was sitting in this interview 3 years back or 4 years back and saying Canadians will be the biggest investors in Indian real estate, you would have laughed. But today, Canadians are the biggest investors in real estate. We have lots of new pools of capital looking, more Canadian firms, more firms from Middle East, more firms from Singapore, more Japanese today starting to look at India. Globally, this is a $1 trillion market. There's $1 trillion of investments which happen globally. And ours is just 5 billion out of those 1 trillion which comes to India. So you can look at the opportunity. US is 475 billion of that, and Germany is 80 billion. Even Japan, Australia, all are between like 30 to 40 billion. So that's a big opportunity. Now, why is there so much of interest? The main interest is, like Avinash and Jaggi said, is in the office asset class. So obviously they're looking at the India tech sector very favorably.
Yes.
Even today, we have only 8% of the global tech industry of 2.5 trillion. So there's still a lot to be done. There are close to 1,400 global in-house centers in India, and per capita stock of office in India is just around 0.4 compared to 5 square feet in US.
Sure.
And we all know, and Jaggi mentioned about this, we all know India is the highest office absorption market in the world today. Even
all
more
right,
than China.
but it's Ramesh, also hold your thought there. Very important point there made by Ramesh is that new pool of capital really coming into India from more Canadian pension funds and even Japanese investors making a beeline. But what happened to work from home situation, which had cast a shadow on the commercial real estate space and other fundamental aspects which are going to impact the sector? We'll discuss that and more on the Deal Street on commercial real estate when we return on Big Deal. Stay tuned.